You may have heard the phrase credit score before, but are wondering what it is or how it's calculated. Your credit score is a 3-digit number that indicates how reliable you are at repaying money that you borrow. So, whether you're looking to get a mortgage, loan, or credit card, a good credit score is likely to increase your chances of being accepted, as well as getting a lower interest rate. There's a few things you can do to make sure your credit score is as good as it can be, so we'll run you through some tips to make sure you're moving in the right direction. First things first, you'll want to make sure you're on the electoral register, as many lenders will use this to check your name, address, and where you've lived before. So, if you're not registered, it could cause a delay or result in your application being turned down. If you haven't borrowed money before, it's difficult for a bank to judge how likely you are to meet your repayments. This impacts your credit score. Taking a small amount of credit can help you borrow a larger amount in the future, as long as you manage it well. An arranged overdraft or credit-building credit card with a low limit may be easier to get accepted for than a credit card or personal loan. And remember, if you pay a credit card off in full every month, then you won't have to pay any interest. Lenders want to know they can rely on you to make regular repayments. A missed payment is likely to harm your credit score. Your payment history for the last 12 months will be most important to lenders. If you've missed payments in the past, but have since become more reliable, your credit score might not be affected as much as you think. And spending near or over your credit limit every month is going to give the impression you're struggling to manage your finances, so make sure you keep within your limits. Too many applications could make lenders think you're struggling for money. If you just want to compare rates, ask your lender to do a quotation search instead of a credit application search. This usually means it won't affect your credit profile. To find out more, search HSBC UK hard versus soft credit checks. Remember that any people you have financial connections to, such as a joint bank account or joint mortgage, will remain on your credit score for up to 6 years. So even if you no longer live with them and they miss payments on their own bank account, this may impact your credit score. So it's worth making sure you're both happy with that before you commit to sharing this responsibility. Finally, check your credit reports to make sure there are no mistakes and any amounts showing as owed on your accounts are correct. You can get a copy of your credit report from companies such as TransUnion, Experian, and Equifax.